Strong GDP and strong consumer spending. Are we going to see a 50 basis point hike in the February? This is a market recap and week ahead 12/27. Welcome to Take It Easy Trading, your channel to get stock market update, my views on macroeconomy, stock and index chart analysis. Please like, comment, and if you want to get notified of new content, please subscribe. It's free. Let's begin. Topics in this video: weekly market performance. We will look at some market breadth and also this week's macro view of GDP, core PCE, as well as the rate expectations from the Fed Watch tool, what to expect in the economy calendar next week, earnings. Let's look at the weekly market performance. Dow Jones for the week is up 0.9%. Year to date is down 8.6%. S&P 500 index is down 0.2% for the week, and for the year is down 19.3%, and Nasdaq is down 1.9% and down 32.9% for the week. Not bad from where we started the week, and we recovered a little bit. The EFI index is up 0.5% for the week and down 16.7% for the year. And the treasury yields 0.3% for the week and up 2.2% for the year. Oil is big this week, 7.2%, as well as for the year is down 5.9%. And the bonds are down 1.4%, and for the year is down 11.8%. And in the rates, 30-year treasury is at 3.82%, and the 30-year fixed mortgage at 6.46%, and 15-year fixed mortgage at 5.69%. Now looking at the weekly heat map, Apple is down 1.97%, Microsoft about 2.44%, and we do see some green in the healthcare as well as in the energy. We just saw the oil was up big for the week, almost 7%, and even financials did very well. And the chip stocks down a little bit as well. In the consumer cyclical, Amazon down 2.97%, and the big down from Tesla about 18% down, and Papa Elon came and said he will not be selling any Tesla stock for the next 2 years, as well as he'll consider stock buybacks if the recession comes at the right price. What is the right price? Was 150 the right price? 130, 122? We don't know. We just have to wait and see. Next up is the economic activity from this week. On Thursday, we had GDP for Q3 released. Expectations were 2.9%, and the actual came in at 3.2%. Very strong GDP, as well as the initial jobless claims were expected to be down, but they were up 216K for the week. That reversed the strong gains we had from Wednesday, and Thursday we had a sell-off, and as well as the Fed rate expectations going up. On Friday we had core PCE, and it came in at the expected rate, 4.7 expected, and the actual is also 4.7. So with this backdrop of strong GDP, strong consumer, and so inflation going down, what can we expect from the Fed? As you can see on this chart, in Q1 we had a negative GDP, and Q2 was slightly better but still negative, but in Q3 it rebounded fast to 3.2% increase, with the backdrop of a very strong consumer from Q1 1.3% consumption to Q2 2.0%, and in Q3 we had 2.3%. Also on consumer confidence, please watch my other update from Wednesday. I had earnings as well as consumer confidence update in that video with index chart analysis. Now let's look at the Fed watch. With the beginning of the week, we had 75% chance of 25% basis in February, and with the strong economic data, the probability has come down to roughly about 63% now. Whereas for the 50 basis point hike, it was 25% in the beginning of the week. Now it jumped to 36%. So that's a huge jump. And the market reacted appropriately in the first part of the week, whereas in the later part of the week, they recovered a bit. And on Friday, we had more spending from the US House, passing a bill for $1.7 trillion for funding the government through September. And that includes 772 billion for non-defense discretionary programs and 858 billion in defense funding. Also 44.9 billion for Ukraine and 40 billion to natural disaster recovery. So more spending and more spending. And what can Fed do? Fed cannot pivot at this time because the economy is strong, the GDP is strong, consumer is strong, and we are still spending a lot of money. And the labor data also shows that the jobless claims is also uh, not decreasing much. So with all this backdrop, uh, it depends on whether it's 25%, but the chances for 50 basis points have gone up, and the market has to bake in that chance. And if it indeed is 50 basis points, it's fully not baked in. Now let's look at next week. The markets are closed on Monday, and there's nothing much going on Tuesday and Wednesday. On Thursday, we'll still have the weekly initial jobless claims, and the previous is now 214K. The forecast is the jobless claims to go up 225K. Let's see if we see a negative jobless claims, which means the the labor market is still strong. Otherwise, relatively quite weak. Now let's look at some market internals. For the Friday on NYSE, we had 26 new 52-week highs compared to 44 new 52-week lows, with advancing issues coming at 73% and 25% declining issues. On NASDAQ, we had 28 new 52-week highs compared to 222 new 52-week lows, 49% advancing issues to 48% declining issues. Now looking at the breadth in the last 5 days, we had 1,109 hitting new highs 21% and 1.9% hitting new lows. So it's relatively positive breadth, whereas we still saw the markets go down and came back up by end of the week. Now looking at the averages, we also see a positive breadth in the averages. Last week we had 19% stocks above the 5-day average. Now, as of this Friday, we have 60% of the stocks above 5-day average. And looking at the 100-day MA also improved a little bit. We had 41% above last week compared to 43% this week, and 200-day MA 37% to 38%. So in overall, looking at the very short term, we have some positive breadth which may be supporting a slight upward bias or a Santa Claus rally next week, barring any surprises. Earnings this week, I already had covered the earnings from FedEx, Nike in my video. Please click on it. I will also put it in the description for you to check it out later on. And next week we have very relatively quiet period, not so much going on from the earnings report side. Also, please check out my other video on the trading trips as well as the trader mindset. I like to watch these just at the beginning of my trading day and get inspired. That's all for this video. Merry Christmas, Happy Holidays, and please subscribe, like, and share if you like the content. It's free.